Direct material consumed, direct wages, direct expense, prime cost, add factory overhead, stores overhead, cost of rectification of defective, gross works cost, add opening stock of WIP minus closing stock of WIP, factory cost, add admin overhead related to production, primary packing cost, quality control cost, research and development cost, minus scrap recovery from units in production, cost of production, add opening stock of finished goods minus closing stock of finished goods, cost of goods sold, add admin overhead general in nature, selling and distribution overhead, interest on borrowings, cost of sales, add profit, sales. Is that clear, everyone? Yes. Now, we'll go. Hello. We'll go to the first item in the cost sheet, that is direct material consumed. Don't talk, please. Guys, don't talk. Sir. Direct materials consumed. Guys, how to arrive at the direct material consumed? Can I say that whatever the raw material I purchase, that itself is direct material consumption? Then quantity of material used for the production during the period. How to arrive at the quantity of the material used during the period? Good. Opening stock plus raw material purchased will give you what? That will give you opening stock plus purchase, raw material available for consumption. Good. To the raw material available for consumption, if we from the raw material available for consumption, if we reduce closing stock of raw material, we will arrive at cost of raw material consumed or cost of direct material consumed. Is that clear? However, if at all any purchase return is there, that should be reduced from the purchases. If at all any scrap recovery from the raw material itself is there, that also to be reduced. Sir, scrap recovery there also you are telling, here also there you are telling. There I have told it as scrap recovery from the units in production. Here I am telling scrap recovery from raw material. Why is it so, sir? That you will get to know. That you will get to know. Shall we start? So, listen. Opening stock of raw material. Opening stock of raw material. To that, we will add cost of purchase. We will add cost of purchase. From that will reduce purchase returns. From that will reduce purchase returns minus scrap recovery from raw material minus scrap recovery from raw material. Now, what I get is cost of material available for consumption. That doesn't mean that everything we would have consumed. If at all everything we consume, there won't be any closing stock. Closing stock is there means everything we didn't consume. So what I will do, I will reduce closing stock of raw material. Closing stock of raw material. So let's sir. Bus light. Go, 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 go. If you are planning, that won't work, madam. You come by bus, is it? No. By? You come by what? Next time you can't tell this. Oh, you're not writing? Take a note. Take. If at all you want revision material, you take. If you find a chi, then no. Now, guys, what do you mean by cost of purchase? Cost of purchase. Amount spent on purchases. Simple, correct? No. May I know what are those? Sir, why scrap is... Sir, I will explain. Sorry, madam, I will explain. I told you, no. We'll explain. We'll go one by one over here. Okay. Why late, madam? You didn't check the fuel? You don't know to kickstart. You don't know to put center stand. Yeah, please. A lot of YouTube videos are there. Even I learned recently. I was struggling. Then in one I saw. All you have to do is you have to step on that. It will automatically go. You have to put your body weight there, then automatically vehicle will go back. You try this. Freight, carriage, dock inward, octroi, transportation. Oh my god, big words. Listen. Cost of purchase. Very simple. Cost of purchase is from the place of your vendor. From the place of your vendor till it reaches your godown. From the place of your vendor till it reaches your godown. Whatever you spend, which is normal in nature, and which are non-refundable. Normal in nature, which are non-refundable, everything will be treated as cost of purchases. If you would have already learnt it in your AS2, if you would have already learnt it in your foundation inventories, whoever didn't learn, listen. It starts from the point of vendor, that is cost of material purchased. What we pay to them, that is price, purchase price minus discount if at all. From there till it reaches our godown, whatever we have incurred, which is normal in nature and which are non-refundable, everything shall be treated as cost of purchase. Everything shall be treated as cost of purchase. So, any cost incurred from the place of supplier till it reaches go down, which are normal and refundable, or you can say no credits available. Which are normal and non-refundable. Is that clear? From the place of your supplier till it reaches your godown, which and all are normal and which are non-refundable. Non-refundable includes no credits available. Is that clear? See, I can write few, but it's not the exclusive list. They might give one or the other things extra, but you should be able to know it. What is it? Okay. So first in the point of vendor, we will spend on what? Purchase price. At the point of vendor, we will spend on purchase price, isn't it? So purchase price of material. Purchase price of material. 1. 2. Guys, while purchasing, they will give discount, no? Yes. So, are you paying that discount or are you receiving that discount? Receiving that discount. That means that should be reduction from the cost, yes or no? But discount can be of two ways. Trade discount, cash discount. Which one I should reduce? Both I should reduce or only one I should reduce? Only one. Which one? Trade discount. Why not cash discount? Cash discount need to be reduced. Listen, cash discount was never relating to purchases. Cash discount is always and always and always relating to payments. You make early payment, you will get cash discount. You make prompt payment, you will get cash discount. But trade discount is for purchasing from them. So here, cash discount nowhere associated with the purchases. Cash discount is a pure financial item, which won't come in the cost sheet. Costing department has nothing to do with the cash discount. That is relating to payment to your vendor. Whereas trade discount is the discount what we receive for purchasing. So remember, cash discount is not reduced, only trade discount is to be reduced. Is that clear? Less trade discount. Add taxes, or it could be add or it could be or less, no need. Leave. Add only you take for the time being. Add taxes. Add taxes where credit is not available. What do you mean by this credit is not available, sir? ITC not available, input tax credit not available. What do you mean by that? Credit can be claimed for. Listen, very simple. Let's say ArivuPro students, let's say AK. You know AK, no? Akhilesh sir. Now, you don't have any set of amount. ArivuPro is a supplier of service, whereas students are recipient of service. Now listen, ArivuPro will supply service to students, where students will make the payment to ArivuPro. Let's say students pay 50,000 plus GST. Let's say GST 9k. Total, how much you guys paid? 59k. Now, what ArivuPro should do is, they should deposit it with Nirmala aunty. Okay. How much they should deposit? 9k. Because GST is not income of ArivuPro. They are just collecting it on behalf of government. But. If at all credit is available, credit is available, see how it works. Now, AK is there, no? AK is supplier of service to ArivuPro. Akhilesh sir is supplier of service to ArivuPro. Now, assume ArivuPro paying 40,000 to Akhilesh sir. Okay. Akhilesh sir will not take only 40,000. Akhilesh sir will take 40,000 plus GST. Akhilesh sir will take 40,000 plus GST. Let's say GST of 18%. How much it would be? $7,200. Now, government will say, ArivuPro that, hey, listen, GST bought into picture where consumer is required to bear the taxes, not customer. Here ArivuPro is customer. Akhilesh sir will provide service to ArivuPro. ArivuPro will provide it to students. So students are here consumers. So I want only students' money. But already Akhilesh sir would have paid 7,200 in the name of ArivuPro to government. Hello? Already Akhilesh sir would have paid 7,200 in the name of ArivuPro to the government. Yes or no? Now, what government says, listen, I already have 7,200 in your name, which you paid it as a input tax. Input means what you purchased, on that what you paid tax. No, input tax already you paid 7,200. Do one thing, don't pay me 9,000, you pay me just 1.8k. So that finally Nirmala aunty got how much? 9k. How much students paid? 9k. Is aunty happy? This one we call it as credit available. This one we call it as credit available. Now from students, so now tell me whether this 9,000 or is it this 7,000? Let's say forget about 9,000. Tell me whether 7,200 is it expense of ArivuPro? Is it? In this 9,000, what we collected from students, did we pay everything to government? Wait, madam. Okay. Sir, how much we collected from students? 9,000. How much we paid to government? 1,800. Where did other 7,200 go? That is with us only, no? To our account we got 9,000. To government we paid 1,800. 7,200 is with us only, no? I am withholding because I already paid 7,200 to my input. Net, that time I paid. Last month I paid. This month I received. Will that 7,200 be my expense? No. Last time I paid, this time I received. I paid to my supplier, I recovered it from my customer. How it will be my cost? So remember, when ITC is available, it's not cost at all. Got it? So if at all ITC is available, make sure it is not there in your cost. If ITC is not available, then it is our cost. For example, for you guys, fees is 50,000 or 59,000? 59,000. Why? This 9,000 no one is going to give you back. Because for you guys, ITC not available. You are not a registered person. Hello. You guys are able to understand? As you are not a registered person, for you ITC is not available, which means that will be your cost. So when ITC is not available, it will be your cost. When ITC is available, that will never be your cost. Anyone, any doubt here? Anyone, any doubt? If no doubt, we can proceed. Pakka? Okay. Now, there is something called as FCM. There is something called as RCM. Forward charge mechanism, reverse charge mechanism. What is this forward charge mechanism, reverse charge mechanism? In my example, ArivuPro is supplier of service or recipient of service? Depends on the transaction. When we provide service to students, that time we are supplier of service. When we provide service to ArivuPro, ArivuPro is recipient of service. Whereas students are recipient. Correct? No? Now, students are recipient. Now listen. How it works? Students will pay GST to ArivuPro. ArivuPro will deposit it to government. Students will pay GST to ArivuPro. ArivuPro will deposit it to government. Whereas this is called as forward charge mechanism. Collect it from recipient, supplier will collect from recipient, deposit it to government. One more thing is called as reverse charge mechanism. Now let's say ArivuPro takes one service from advocate. ArivuPro takes service from whom? Advocate. Now, who will pay to whom? ArivuPro will pay to advocate. No doubt in that. But advocate service falls under RCM. What do you mean by that, sir? ArivuPro, for example, if the advocate fees is 1 lakh, to advocate they will pay 1 lakh only. Now, GST on it 18,000, ArivuPro only will pay to government. Generally, how the thing should work? Recipient of supply is ArivuPro, so advocate should collect and advocate should pay to government, FCM. But in case of RCM, recipient only should deposit GST amount to government. Now my question is, in this case, whether this 18,000 is cost of ArivuPro or no? Cost of ArivuPro. In this case, whether whatever ArivuPro is supplier and paid it to government, is it cost to ArivuPro or no? Okay, let's say in AK's case, this 7th, let's say now ArivuPro is again a recipient, AK is a supplier, ArivuPro paid to government, AK paid to government. Now in this case, tell me whether GST portion, whatever ArivuPro paid to AK, is it cost or no? cost. In both the cases, is it cost? This is FCM. This is RCM. So in which case it is cost, in which case it is not cost? FCM is a cost, RCM is not a cost. Wrong. It doesn't matter whether it's FCM or RCM. Arey, I paid to Nirmala aunty or I paid to my supplier. How it will matter? I am paying, no. What matters is, boss, on that credit is available, credit is not available. Doesn't matter whether it's FCM or RCM. Understood? Arey, I paid to AK or I paid to government. How it matters? I paid, no. Now the thing is whether I was able to take credit on that or no. If I am able to take credit, then it is not my cost. It doesn't matter FCM or RCM. If I am not able to take credit, then it is my cost. So always remember, it doesn't matter whether it's FCM or RCM. All it matters is credit available, credit not available. Is that clear, everyone? Okay. Now tell me one thing. Let's say purchase price includes GST. Purchase price includes GST. ITC is available. What we should do? What we should do to the tax amount? Reduce it. Because purchase price, tax is already included in that. Whereas tax is not my cost at all, because I am getting credit for that. So I will reduce it from the cost because it is not my cost. Clear? Purchase price inclusive of taxes, but ITC is not available. What we should do? Arey, ignore, no, it's already added. Why you are adding? Just ignore. Correct treatment only. Are you guys able to understand? Let's say 1 lakh is my purchase value. Now I have written 1,18,000 inclusive of taxes. Now that 18,000 credit is available. In that case, my cost is how much? Only 1 lakh. So I have to reduce 18,000. I have written 1,18,000. 18,000 credit is not available. My cost is not 1 lakh. My cost is 1,18,000. What I should do? Already it's 1,18,000. Why you have to add? Ignore. Got it? And let's say I have written 1 lakh as a purchase cost. I haven't added tax yet. Let's say I paid GST of 18,000. Credit available. What should I do? Ignore. Because my cost is 1 lakh only. Don't do anything. Ignore. Let's say my cost is 1 lakh. GST is 18,000. ITC is not available. Add it. Just find out. Very simple. Very simple. No need to get confused. Just find out whether it's your cost or no. When it will be your cost? When ITC is not available, it's your cost. When it will not be your cost? When ITC is available, it's not your cost. Very simple. That means when ITC is available, it's not your cost. If it is already included in the cost, exclude it. If it is not included in the cost, what you have done is correct. Don't do it. Don't do anything. Don't add it. Whereas ITC is not available, that means it's your cost. Just check whether it's included in the cost. If the answer is yes, you have done correctly. No need to adjust anything. But if it is not included in the cost, add it because it's your cost. Is that clear? Everyone? No doubts? Hello? So we can proceed. No confusions, right? So don't get confused there. ITC is available, add ITC not available, reduce all those drama. Very simple. If ITC is available, it's not your cost. If ITC is not available, it's your cost. If ITC is available, not your cost. Let's say ITC available but included in cost, then exclude it. ITC is available, not included in cost. What you have done is correct only. Don't do anything. Whereas ITC is not available, just check whether it's included in cost. If it's already included, correct treatment, leave it. If it is not included, got it? Okay. Okay. Tell me one thing. Purchase cost inclusive of GST. Purchase cost inclusive of taxes is rupees 2,36,000. 18% GST, credit available. Okay. So may I know the purchase cost, please? Two lakh. How many of you say it's 2 lakh? How many of you say it's 2,36,000? How many of you say some nonsense numbers are 1,92,000, 93, 94, something like that? Two lakhs. Listen. Okay, listen. Everyone, listen. Hey, listen. One thing is clear here. Credit available. That means it's not your cost. But in purchase price, it's already included. Correct? What we should do, we should exclude it. Now the question comes, how much amount we should exclude? Don't do 236,000 into 18%. Because 236 is not the cost. 236 is cost plus GST. 236,000 is not the cost. 236,000 is cost plus GST. So what we should do, sir? Very simple. Guys, GST is applicable on cost, no? Then can I take cost as 100? Hello? GST as 18, because if cost is 100, GST will be 18. Then purchase cost inclusive of GST will be 118. Now I know 118 means 2,36,000. 100 means question mark. Rupees 2 lakh. Don't apply 18% on 2,36,000 directly. Don't add 18% on 2,36,000 directly, because that is like profit percentage on cost they have given. You are applying it on sales amount. Chapter name, cost sheet. We can proceed, I feel. There, last bench, sir, shall we start? Shall we proceed? Okay, listen now. Hope about taxes, credit available, credit not available, it's clear. Okay. Add. From the vendor place, we have to bring it to our place, no? For that, don't you think we'll incur transportation, freight, etc.? Okay. Add transportation cost. Ayyo. Add transportation cost, freight inward or outward? Freight inwards and your transit insurance. Only transit insurance, guys, not your go down insurance, because transit insurance will be taken for the transportation. Go down insurance is for storage of the goods. I told only the cost relating till it reaches go down, not after storage. Reason being very simple. Once it goes inside the go down, you can't trace it per unit how much. One unit might be kept for 1 month, one unit might be kept only for a day. Go down rent, how will you divide between the units? Not possible. Practically, it's difficult. That's the reason we are not going to consider whatever we incur after it reaches go down. So, transit insurance, loading and unloading charges, etc. Loading and unloading charges, etc. Is that clear? Okay. Next, we are going to add container charges. Yes, sir. We are going to add container charges net amount, not the total amount. What do you mean by this, sir? Listen. Now let's say I am getting my goods in some container. Now let's say container charges are 2000. Container charges are 2000. Now those containers could be returnable, non-returnable. Assume those containers are non-returnable. That means that full 2000 will be your cost. Okay. However, if it is returnable, I received a container, I took out my goods, I am sending back my container. When I received, I paid 2000 for that. When I sent back, they paid me back 1800. That means, is my cost of container 2000? No, it's just 200. Because of course I paid 2000, but I got 1800 back. No. So I should take only net amount in that case. So all you have to do is check whether containers are returnable or non-returnable. If it is returnable, net amount you should take. If it is non-returnable, gross amount you should take. Simple. Got it? This is your direct material consumed. This is not the only list. I am telling again. This is not the only list. There might be other things also. You should know exactly. Very simple. From the place of vendor till it reaches our go down, whatever is normal, whatever is refundable. Sir, why not abnormal, sir? Abnormal, how can you charge it to your customers? You should bear it on your own. Abnormal, you can't charge it to your customer. You should bear it on your own. You should charge it to your costing P&L. Make sure it's not added in the normal cost. Now let's assume one of your faculty, let's say it should not happen or leave. One of your faculty going by two-wheeler. They parked two-wheeler in middle of the road. One truck came, hit the two-wheeler. I mean, faculty is not there over there. Only two-wheeler. Now, two-wheeler, let's say 50,000 rupees loss. Tomorrow morning, those people will come. Start collecting 500, 500, 500, 500 from you guys. Our two-wheeler is lost. Please give us some money. Is it right way to do? No. Include it in the fees and collect. No. No. It is not a right way. It should not be included in your cost. Yes or no? That's the reason abnormal should never be treated as the normal cost. You should not take it for computation of cost per unit. Abnormal should be charged to costing P&L. Whatever the profit they get no after operating, from that they should reduce that 50,000. That will be their net profit. Got it? So always remember, abnormal items should never form part of your normal cost per unit. Got it? Because we are doing all this drama to determine the cost per unit now. So in that, abnormal item should never be there. In costing, you should always remember this. Abnormal item, it's always costing P&L. Okay? Only normal item should be there in the cost per unit. Is that clear? Okay. Second item is what? More about this material we are going to learn in material cost chapter. Second, direct wages. Direct wages. Guys, direct wages are very simple. Whatever the payment, whatever the benefit you give to your factory workers, everything will be treated as direct wages. Okay. Total cost incurred towards direct factory labors or workers. That one we call it as direct wages. Got it? Generally, what and all will be there in this, sir? Wages, hey, eh? Wages paid. Guys. Sir, why refundable goods are not included? What do you mean by refundable goods? Ayo, I will tell Monisha, why scrap, I will tell. Can you wait for other half an hour, 1 hour? When that scrap of units in production will come, that time I will tell why there we reduce that, here we reduce this. Okay, thank you. Why refundable goods are not included? What do you mean by refundable goods? Guys, hey, tell me one thing. In cost sheet, we are trying to determine the profit for the period or no? Yes. That means, should I take expenses incurred during the period or expenses paid during the period? Incurred. Accrual concept. Hello. Not paid during the period. I don't want cash profit. I'm trying to find out how much is my profit for that particular period. So what I should take? I should take cost incurred during the period. So wages paid is not the only cost. If at all any outstanding is there, that also I should add. Add outstanding wages. Add outstanding wages. Add cost of perquisites. Add cost of perquisites. For example, assume we are direct workers, I mean direct wages, ArivuPro what they pay is considered as direct wages for us. Do you think only what they pay here, will that be the only cost? No. They are incurring rent of flat. They are booking the tickets, transportation cost. All those things will also be their cost only, no? Towards us. So all those things will be treated as direct wages. So any perquisites given, that will also be treated as direct wages. Got it? Okay. Also, employer's contribution towards EPF, ESI, etc. What do you mean by this employer contribution? Sorry? Portion of their salary, wages, etc. Na? Listen. Provident fund. Awesome. Yes, EPF means employee provident fund. Employee provident fund. ESI means employee state insurance. Okay. What's your name, madam? Let's say Harini is our employee. Harini is our employee. How much salary you need? Whatever I give, 10 rupees I will give. No bargaining, please. No negotiation. Final 20. Something 5 rupees. You should know exactly. Tell madam. Forget it. Don't listen to them. You tell. 40k. Think big, Harini. 1 lakh. Thank you. Listen. Guys, listen. Now, 1 lakh is salary of Harini. Now, what government says? Government says that, hey, listen, 1 lakh you pay to her, but who will take care of her future plans? Correct, no? So, you do one thing, whatever for her future plans she needs to deposit, a portion of that you also should contribute. What government says? Boss, 12%, assume 12% of her salary deposited to me. So 12,000 we have to deposit. Now tell me, for me, cost is 1 lakh or 1 lakh 12,000? 1 lakh 12,000. I paid 1 lakh to Harini, 12,000 to government, 1 lakh 12,000. When I went to deposit there, that time government told, hey, listen, along with your 12,000, your employee share of 12,000 also you pay. Cheating, no? But government said employee share. What do you mean by that, sir? 12,000 out of my pocket I will give. Employee share I will reduce from her salary and give. That means finally I will give 88,000 to Harini, 24,000 to government. So tell me one thing, my cost is option A 1 lakh, option B 1 lakh 12,000, option C 1 lakh 24,000, option D 88,000. 1 lakh 12,000, not 1 lakh 24,000, because I gave 1 lakh to Harini. Of course, in that 88 I gave it to her, other 12 I gave to government. Correct? No. That means in wages the 12,000 is already paid, recovered. Add on to that what I paid, that will be my cost. So always remember, employees' contribution will never be our cost, because that is already included in the salary portion. Only employer's contribution will be our cost. Is that clear, everyone? So that's the reason we will add employer's contribution, because employee's contribution is already included in the wages paid. Employee's contribution is already added in the wages paid. And in the question, if it is silent, ESI, EPF, etc. is paid towards which worker, then always assume it towards factory workers. In the question, if it's silent about ESI, EPF, gratuity fund, etc. of employer's contribution towards which workers, always assume to be of factory workers. Is that clear? That is your direct wages. Anyone, any doubt in the direct wages? If no doubt, we can proceed. Proceed. Now we are going to third one. Third one is what? Direct expenses. Direct expenses. See, again, this is not the exclusive list, but yes, majority of the time only these many items will be there. Okay, do one thing, guys. In the beginning, leave some space. I mean, let's say space to write one letter and one arrow. For example, this much space you leave. Okay, from here you start writing what I write. Understood? Okay. First, your technical assistance and know-how. Your technical assistance and know-how. What is this, sir? For example, it's just like royalty only. For example, now Suzuki, Japanese company, they come to India and they will train on some new technology. They train our Maruti Suzuki people here. So they taught them some new technology. For that, we are going to pay them some money because it is their technology we are using. Just like royalty only. That one only we call it as technical assistance and know-how. Technical assistance and know-how. Got it? So, first one is your technical assistance and know-how. Technical assistance and know-how. Yesterday only I told you royalty. Correct? Royalty. Where should I leave space, sir? Exactly where I am leaving on the screen here. Leave some space and write those. Next one, amortization. Amortization, also you can call it as depreciation. Amortization of molds, patents and patents. Amortization of molds, patents and patents. Very simple. Molds and all are the like, it's a shape where if you pour anything on it, liquid, wax, etc., you will get that particular item in that particular shape. That one we call it as molds, patents. Okay. Patent, you know, you have some technology, you got it registered, that you can't use it for 100 years. You can use it for 12-15 years depending upon the licensing. So all those things, amortization, you have to book expense no year on year based on the units you produced. That one we call it as amortization of molds, patent, patents. Okay. Next is your specific software. specific software. Here guys, we took some software for some work. After that particular work gets over, will that software be of any use? For example, now for this particular metro project, they have taken one software, assume. Now that metro project got over. What happens to software? Will it be of any use? No. Are you guys able to understand? It won't be of any use at all. That's what specific software will be relating to that particular item which you can trace directly. That's why we can treat it as direct expense. Got it? For example, invisible tooth aligner is there, no? Yes, that is majorly based on application, right? In application, it will be tracked exactly how much is moved, how much to be moved, when to change, etc. That is clearly customized for you. Once yours it's done, can someone else use that software? No, it's not. So those kind and all, we are going to treat as specific software which you can trace directly with any particular line item. Okay. Hiring charges of specific equipment. For example, let's say I am a constructor. Now let's say I am constructing one apartment. Now to this apartment, to our let's say 30th floor, we need one crane. Now I hired one crane. Let's say that work for let's say 1 year. Now after that I am going to send back that crane. Yes or no? Now when I send back that crane, I hired that crane. Can I put it to general, or I exactly know that is relating to which project? I exactly know that it is relating to which project. So I am going to book it to that particular project as a direct expense. Let's say I own a crane. That particular crane will be used throughout in my different projects. Now can I particularly charge overall that crane cost to our one project? I should charge it in a overall basis. So always remember, higher charges of specific equipment will be treated as direct expense. Got it? Okay. Drawings and designing cost. Guys, drawings and designing cost, not drawings and designing department cost. Both are different, please keep in mind. Drawings and designing cost means, let's say I want to produce something. For that I need one design, I need one drawing, I need one sketch. For that I will go to, for example, I am a constructor as I already told you. Now I want to construct one apartment. For that apartment I need one design. Now I will go to architect. I will ask them to do that. Let's say I paid them 20,000 rupees. I took that design, I came. Now, is this 20,000 relating only to this particular project, or is it relating to everything of my project? Only relating to this particular project. Now let's say instead of doing this, I hired one architect. I pay them salary of 2 lakh. Now their work is, whenever I need a project, they have to give me a drawing, like drawing design. Now in this case, 1 month they will give two drawings, 1 month they might give 10 drawings. That means I have their own department in my organization. Now can I trace exactly their salary relating to this particular drawing? No, I can't. In this case, I am not going to treat it as direct expense. So if at all it's specific drawing and design cost, not design department cost, then it will be your direct expense. Otherwise, it's not going to be your direct expense. Is that clear? Okay. your power, fuel, heat, etc. will be there, no? On the basis of which your machinery runs, all those things will be treated as direct expense. Sir, how it is direct expense? Array, exactly, I will be knowing for one unit how many hours of machine I should run. For that one machine hour, how many units of electricity they consume. Then all I have to do is units into cost per unit. For example, one machinery takes 10 units per hour. To produce one product, I need 2 hours. That means, can I say that I'm going to use machine for 2 hours? So 2 hours into 10 units, which will come to 20 units. Each and every unit will consume 20 units of electricity, kilowatt hours. Let's say each kilowatt hours will cost you 10 rupees. So 20 into 10, 200 will be my electricity cost. Directly traceable, no? So power, fuel, heat, steam, etc. will take it as direct expense. This one we also call it as utilities. Sir, if we hire an architect for whole business, they won't be direct expense but to be added in direct wages. That's what I told. And it won't be direct wages also because you can't trace it to the particular project. It will be indirect wages. You can't trace it with the project. Indirect wages. I will tell where it will come. Is this clear? Okay. Next one is your job work cost. Job workers cost. What is this job worker cost, sir? Now let's say I told that apartment thing, correct? No, I'm constructing one apartment. Now construction, I agree, it's my domain, I'm into that business, but in that I have to install the lift, no? I have to install the lift, no? I don't have enough resource for that. I'm not into that business at all. So can I ask my customers, residents to do that? No. What I will do, I will hire someone. For them, I will make the payment. They will install the lift. I will hire someone. I will make the payment to them. They will install the lift. From a customers, I will receive for building plus lift. Now my work, what I outsource to someone, that one only we call it as job work. That one only we call it as job work. For them, whatever I paid, now that lift cost is relating to this particular apartment. Can trace it, no? So the job workers cost, I'm going to treat it as direct expense. Okay. Done. Along with that, any special material, frame, special frame, etc. if they tell, all those are your direct expense. Okay. So what and all, guys? Technical assistance and know-how, royalty, amortization of molds, pattern, patents, specific software, higher charges of specific equipment, drawing and design cost, power, fuel, heat, steam, etc. Job worker cost. Okay. And you can add special material, special frame, etc. No, if it is a direct material, normal raw material. Sure. Where were we? If it's normal material like raw material and all, there we will take. End of the day, it's prime cost only. So special material, if and all is there, only traceable to that particular product. No. Direct material is general in nature. In that you might have produced 2-3 different this thing. Here you are directly charging it to that particular job. So better generally we take it as direct expense. Okay. Now, listen guys. Hey, let's say you have one friend. Okay. Let's call them as JS. Let's call them as Jayasurya. JS. Any Jayasurya in the class? No one? Nice. Okay. Now let's say JS and his girlfriend fought. Normal. Now let's assume Jayasurya, your friend, is into bit of that side. I mean, that side in the sense cringe. You might be having friends like that. You will get to know immediately they broke up or they fought. How you will get to know? They will put WhatsApp status, Instagram stories, chat stories. One guy will be oh notes that song done. Also in WhatsApp along with story they will do one more thing. DP what they will do? Change it. They will remove it. So they will trash their DP. What they will do? Trash their DP. Who did this? Trash DPJS. You just remember this. Majority of the direct expense will be sorted. Hey. From so far I told 8-9 items. Putting all my energy for that, no. So T for technical assistance and know-how, R for royalty, A for amortization of molds, pattern, patents, S for specific software, H for higher charges of specific equipment, D for drawings, design cost, P for power, fuel, steam, etc. also known as utilities, J for job worker cost, S for special material or a special frame, etc. Okay, quickly go through this, then we'll go to the next one. Fine. Shall we proceed now? Yes. What is the next line item, guys? You will get the factory, prime cost. To the prime cost, we have to add factory overhead. Factory overhead is nothing but, guys, your indirect material, indirect labor, indirect expense relating to factory production. Factory overhead is nothing but your indirect material, indirect labor, indirect expense relating to production or a factory. Okay. So factory overheads also known as works overheads. Same, guys, leave some space and continue. Shall we start? Again, this is not the exclusive list. Certain things will be added later part if the situation arises. Shall we start? Okay. Guys, your amortization, or you can also call it as depreciation, of your jigs, fixtures, tools, etc., we are going to call it as factory overhead. Your jigs and all is that screw, bolt, nut, all those things will be there now, like this inside machine, some nonsense thing. Okay, that won't get wear and tear on the basis of per unit produced. Overall, once in a while it gets damaged. For example, madam, your battery, when did you change last time? 1 or 2 years before. Now, do you think this, whatever the new battery you are going to put, that also is going to run on the basis of capacity, I mean kilometers? Exactly, okay, 121.5 kilometers, my battery will stop. No. Like that, few parts of the machine and all will be there. No, you can't trace exactly with how many units it is, right? Based on time period or something, it will get spoiled. So, like that, all those jigs, fixture, tools, etc. will be there. No, that we are going to treat as factory overhead because it's an indirect expense. You can't trace it with all the items what you produce. Okay, one is that. Next one, depreciation of plant and machinery, depreciation of plant and machinery, factory building, etc. So whatever is there inside the factory, whatever you have purchased, you have capex inside the factory, the depreciation of that particular thing will be treated as factory overhead because it's an indirect expense. You can't trace it along with the output. So we are going to trace the indirect expense and we are going to book it as a factory overhead. Okay. Next up, insurance. Insurance of plant and machinery, factory building. This is very important. Stock of raw material and WIP, etc. So now you understood where the go down rent will be. Go down rent won't be there in the direct material, rather it will be there in the factory overhead. Because that you can't trace it with each and every unit. So we are going to treat it as overhead, and as it's relating to the factory, we are going to treat it as factory overhead. Listen, sir, insurance of raw material in WIP. Sir, but generally depreciation is debited in P&L, no sir. Why we add in cost? Cost is debit only, no? I'm not getting what you are trying to say. Cost is expense, no? Expense is debited only, no? Don't think that whatever the cost we do, this one we will take it to trading account and we will start. No. As per costing, I'm trying to find out my net profit. So we don't prepare separately one more P&L and all. So here, sir, insurance of raw material WIP, fine. Why not insurance of finished goods? Guys, always remember, raw material and WIP will be there in the factory and godown. But finished goods will never be there. Finished goods will be there in the warehouse. So finished goods, what you keep in warehouse, that is not relating to production, but rather it will be relating to sales. So always remember your warehouse rent, that is warehouse rent, warehouse insurance and all, that is relating to finished goods. That should not form part of your cost of production. Rather it should form part of your cost of sales. But you know that factory overhead is part of cost of production. Because finished goods is already produced, warehouse insurance rent and all should not form part of your COP. That's the reason for factory overhead we consider only insurance of raw material and WIP. Insurance of raw material and WIP. Is that clear? Insurance of finished goods will be taken as selling and distribution in the cost of sales. Hope it is clear. Indirect employee cost. Related to production, because indirect employee cost could be relating to many things, but in that whichever is related to production, that I am going to take it as factory overhead. Listen, your foreman, supervisor, all those things will be there. No, indirect factory workers, all those things comes under this. Sir, factory manager, or production manager. Production manager direct wages? How can manager be a direct wages? It is indirect, no doubt in that. But manager is there to manage, administer. That means remember, manager's salary will always come under admin overhead. If that manager is relating to production, then it comes under admin overhead related to production. Don't treat it as factory overhead. If at all manager is related to production, they won't be there in the factory. They will be in their office, but they will be handling the production. So it's managing, it's administering. So always remember, any manager's cost, it won't come in factory overhead. It will be admin overhead. If they are relating to finance, accounts, general admin overhead. If they are relating to production, admin overhead related to production. Like that. Please keep in mind. Managers will never be factory overhead. Got it? So here your supervisor, foreman, all those things will come. We have stores and spares. Based on wear and tear, we will replace all the stores and spares, so you can't exactly trace it. This also we call it as consumables. We also call it as consumables. Is that clear, everyone? Okay. Next, I told you, if you remember, drawings and design cost comes under direct expense. However, if at all I keep them as my employees itself, then it will come under factory overhead. not direct expense. So drawing and design cost comes under direct expense, drawing and design department cost, because once I bring them as my employees, then 1 month they might give 10 designs, 1 month they might give 100 designs, 1 month they might not give designs, but monthly payment will be same. So you can't trace it with the output, but related to production. So I'm going to take it as factory overhead. Is that clear? Service department cost including pollution control and engineering. Service department cost including pollution control and engineering. What is this service department cost, sir? More about it you are going to learn in your overheads. Now I don't want to explain because that is altogether one big topic. Okay, more about it you will learn in overhead. For the time being, let it be. Okay, but remember that will form part of your factory overhead. There is something called as reapportionment that we'll learn there. Lease rent, factory building, plant and machinery, etc. And your repairs and maintenance of factory building, plant and machinery, etc. Okay, these are the few general items what will be there in the factory overhead. So what and all guys, amortization of jigs, fixtures, tools, etc. Depreciation of plant and machinery, factory building, etc. Insurance of plant and machinery, factory building, stock of raw material, WIP, etc. Indirect employee cost related to production, stores and spares, also known as consumables, drawing and design department cost, service department cost including pollution control and engineering, lease rentals of factory building, plant and machinery, etc. Repairs and maintenance of factory building, plant and machinery, etc. Okay. Guys, you might have noticed this trend in Instagram. While these influencers, they will go to some random group of girls. Yes. Then they will ask, according to you, what boy's name you think is a red flag? Yes. And now it went to sneaker, it went to jeans, everything. Now, generally one name will come. What is that? Karthik. Yes. One is Karthik, no doubt in that. But not Karthik Chennai. He is Green Forest. Red flag, one more. Major name. Rastrith. Aryan. Okay. All people telling their ex name. What else? Hari. Okay. Heart stealer Hari. Sai. Okay. Generally, majorly will get that name. Akhilesh, no man. Aditya, thank you, sir. Aditya is the major name what they tell. Now let's say in your group also one guy is there, Aditya. I haven't seen a single group where they call Aditya as Aditya. They will call him as Adi. Let's say Adi is having DSLR camera, proper red flag package. Yes. So you can remember this code word or this particular items as Adi add is A for amortization of jigs, fixture, tools, etc. D for depreciation of planted machinery, factory building, etc. I for insurance of planted machinery, factory building, stock of raw material, WIP, etc. One more I for indirect employee cost related to production. S for store spares and consumables. D for drawing and design department cost. S for service department cost. L for lease rentals. R for got it. Quickly go through this. We'll go to the next one. Done acting. You too only. What's your name? And JUDI. Simple. Done acting. Tell. Factory overhead. Faster. Amortization of jigs, fixture, tooling, etc. Depreciation of factory building. In factory building, that's it. Plant and machinery. Okay. Insurance of factory building, plant and machinery, stock of raw material, WIP, etc. Indirect expenses of wages. Indirect employee cost related to factory. Stores, spares, all those things. Okay. Consumables. Drawing and design department cost. You guys divide the work. First word you see, second word you see. S for service department including pollution control, engineering, etc. L for lease rentals of plant and machinery, factory building, etc. R for repairs and maintenance. That's why classes will be happening. Don't do that. I mean, do that. For them it will be entertainment. But proper tone, like tune, you should be like doing something like this. Don't do tuck 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 tuck. I think it's noise cancellation. It won't affect. Leave if you want to do. Then shall we proceed? Okay. Stores overhead means stores overhead directly they give. You don't have to worry. Cost of rectification of defective. Cost of rectification of defective also directly they will give. You don't have to worry. Okay. Then that will give you gross works cost. To that add opening WIP minus closing WIP. Everything will be given. You don't have to worry. Next is your admin overhead. Shall we go to admin overhead? I will write it as administration overhead only. Otherwise, you guys also will start writing admin overhead, admin overhead. Guys, very simple. Administration overhead divided into two. Related to production, general. Related to production and general. Remember, if at all it is related to production, how to treat it? Considered under cost of production. If it was general in nature, considered under cost of sales. Sir, how do we get to know whether we should take it as related to production or general? If at all manager salary they say general in nature, general. If they say related to, production manager, then related to production. What about the other expenses? Remember guys, if the question is silent about whether it is general or related to production, always assume it to be general. I repeat again, if the question is silent about general or related to production, always assume it to be of general. However, if the question says or gives any hint it is related to production, then only it's related to production. Okay, please keep that thing in mind. If any hint is given, if any hint is given that it is related to production, then only consider it as related to production. In all other cases, it is considered as general. It is considered as general. Example, they will tell admin overhead recovered as some percentage of direct wages, factory overhead or factory cost. That means direct wages, factory overhead, factory cost, everything is relating to production. No, if they are telling it is some percentage of that, then this is also they are trying to connect with factory. Admin overhead related to production. Or they might also say admin overhead some amount per unit produced. That is, they are talking about produced unit, not sold units. That means they are trying to link it with the production. So that will be treated as admin overhead related to production. Manager salary or production department manager salary. Etc. All these things we are going to treat it as related to production. Okay. We'll proceed. See, they will give, let's say, admin overhead absorbed as 50% of factory cost. That means they are trying to relate it with factory. Or 50% of direct wages, 40% of factory overhead, something like that. Or they might say, your admin overhead, rupees 10 per units produced, not units sold. That means production again. Or they will tell production manager salary, production department cost, all those things. Is that clear? Shall we proceed? Okay. In that A is done. Next is P. That is packing cost. That too primary packing cost. Correct? No? So listen here. Packing cost. Guys, packing cost generally we can divide it into two. One is primary packing. One more is secondary packing. Primary packing, secondary packing. Concentrate. What do you mean by primary packing, sir? Guys, primary packing is nothing but packing done to maintain the quality of the product. Whereas secondary packing is the packing done for either marketing purpose or distribution purpose. I repeat again. Primary packing is the packing done to maintain the quality of the product. Whereas secondary packing is the packing done for marketing or distribution purpose. For example, soap. Let's say Dove. Correct? First, in Dove soap, the outer box will come. Inside that, soap will be there, which is wrapped in the one more plastic cover. Correct? No? Now, no? I don't know. I don't use it. See, hard skin. Now it's not. A Pierce is coming in that. Okay. Pierce then. Whichever soap. Yeah. Now, that plastic is there. No? That is required to maintain the quality of the soap. Otherwise, it will get affected because of the air and water, liquid. But that outer cover is there. No? That is only for the purpose of marketing. They are nicely going to arrange it in the shelf. Correct? So, when people can go, they can see, they can buy it. So, now that outside box is secondary. Whatever is there inside is, got it? Amul chocolate. Let's say dark chocolate. Yes, milk chocolate. Whatever it is. One outside box will be there. Inside that again one more packaging will be there. The inside packaging is to maintain the quality of chocolate. That outside is for a marketing purpose. Perfumes, bottles, containers, that is to maintain the quality of the perfume. Outside one more box they will give no marketing. Are you guys able to understand? Toothpaste, tube is to maintain the quality of the product. That outside box is for marketing purpose. Let's say biscuits. Packaging will come, no? That is to dark fantasy. Okay. Oreo, dark fantasy, whatever nonsense it is. One packaging they will give, no? No, not dark fantasy, ignore it. Because again I have to explain 3 more examples. No. That went to same zone. One big box for secondary this thing. Normal, 2020, Mom's Magic, Crack Jack, 50-50, Chaska Maska, Parle G, OG, what else? Monaco, Hide and Seek, Milk Bikis, Biscoff. Biscoff is the scam. I mean, whatever is coming now, Indian production. They spoil name of Biscoff. Parle G, they are adding that sugar layer and giving. All those, one outer cover they will give, open it, there will be biscuits, no doubt in that. But do you think for distributor also it will come like that? No, it will come in the big cartons, big boxes. Now that big boxes is for marketing? No, for distribution. Correct? No. So even that is considered as secondary. The inner package is primary. That big cartons, big boxes is your secondary. So now that whatever is there to maintain the quality of the product, primary packaging, take it as part of cost of production. Whatever is there to distribute or whatever is there for marketing, Tanishka, that one you have to take it as secondary packaging, which is relating to marketing and distribution, that is S&D, selling and distribution overhead. Is that clear? So if it's a primary, take it as cost of production. If it's a secondary, that is for distribution and marketing. Sir, dairy milk, let's say up to 40 rupees dairy milk. They won't give any 2-3 covers and all, only one is there. Now is it primary or is it secondary, sir? Packaging is primary. The cost of printing is there, no, on that. Dairy milk, some milk is coming out of the pot, marketing. Secondary. Got it? So if at all they give like that, you have to divide it. So primary packing to maintain the quality of the product. Primary packing to maintain the quality of the product or output, whereas secondary is for the purpose of marketing or distribution. For the purpose of marketing or distribution. Done. Next, primary packing shall be considered under where? Cost of production. Secondary packing shall be selling and distribution. We'll proceed. Next, PQ. Q is quality control, that they will tell quality control staff salary, quality control department, all those things. R is research and development. If it is related to production, then it is taken as part of COP. S is scrap recovery. Monisha, concentrate. Okay. Scrap recovery. Guys, scrap recovery could be from two ways. One is scrap recovery of raw material. One more is scrap recovery of units in production. One is scrap recovery of raw material. One more is scrap recovery of units in production. Sir, what is this, sir? Guys, assume. Let's say you, let's say, take rare rabbit as an example. Rare rabbit, rareism. I mean, it's a clothing brand of India, which is competing worldwide. For men, rare rabbit. For women, rareism, if I'm not wrong. Rareism. Forget. We'll go to west side. Let's say west side people bought some fabric. Okay. Now, fabric is good only. Fabric is awesome. Fabric is crazy good. Yes. Now, but that is somehow not meeting the quality criteria of west side. They got some fabric, their raw material, correct? That is not meeting the criteria of west side. So immediately what they did, they asked the vendor, can you take it back? Vendor told no return policy. So the portion of fabric which is not meeting criteria, that one they transferred it to Zudio. Let's say in Zudio that fabric they are going to use, that criteria is matching. Assume. Now my question is, whatever the fabric I transferred as a scrap from the west side, is it consisting of only raw material cost or is it consisting of any other cost? Only raw material cost. So scrap recovery from raw material, straight away I reduce from my raw material cost. Understood? I recovered some money. No, I should reduce from the cost. Now, in the west side, other fabric is there. No, that we are working. Lot of cutting and all pieces, all those wastage will be there. No, now that we are giving it, let's say to west side home, the home department where they will prepare some pillow, all those nonsense things. Let's say they are using it now. The cut pieces of fabric. Now my question is that whatever west side recovers from that cut pieces now, whether that cut pieces is having only material cost. Who cut that? Labor. Where did they cut? Factory. That means factory rent, factory electricity, all those things is there or no? Lighting, depreciation of machinery, all those things are there or no? That means that cut pieces cost is not only material cost. That cut pieces cost consists of material, labor, overhead. So don't you think it's advised to reduce it from the cost of all these three rather than reducing it only from the material cost? That's why we will reduce after factory cost. That is before arriving at COP. Understood? So if at all it is scrap recovery from the material, that means that includes only cost of material, nothing else. So I will reduce it from the cost of material. However, if it is the scrap recovery from the units in production, that includes material cost, that includes portion of labor, that includes portion of factory overhead. So after arriving at all the three total, which is nothing but factory cost, I will reduce it. Is that clear? That's the reason, guys. One is reduced from the cost of raw material. One more is reduced from the factory cost. I hope Monisha's soul is happy. Understood? Everyone? So, scrap of raw material, what we should do? Reduce it from the cost of material. What we should do to the units in production? Reduce it from the factory cost while arriving at COP. Got it? Okay. Recovered amount shall, one more explanation of this topic. See, if at all it is any scrap recovery from the sale of raw materials straight away. Okay, where no labor, nothing is involved. We got the material, there is some wastage in it, where no labor, overhead, etc. is involved, just we are sending it back. Scrap. That only cost of material was involved in that, so I will reduce it only from the cost of material. Let's say after putting it for production, some wastage is coming. That wastage I am selling it. For example, let's say I am an automobile, let's say car manufacturer. Okay, let's say I am a Toyota, or let's say I am a Maruti Suzuki. Now my steel will come from Toyota Steels. Now I buy steel from Toyota, in that few things are having rust in it. Okay, now the condition of our contract is that up to 2% rusting, it will not be taken back, because that is very normal. So what we did, that rusted one, we sold it. Rusted steel, we didn't put into our factory, nothing. Straight away, we sold it, we recovered some scrap from that. This involves only material cost. So I am going to reduce it from the material cost. Now let's say that steel I put into production. There, of course, the wastage will be there, cut pieces of steel, etc. All those things for recycling I have put. Okay, scrap again. Now that scrap, whatever I recover, that includes machine cost, that includes overheads, that includes labor, all those aspects. So I will reduce from the factory cost. Got it? Oh. Recovered amount shall be reduced from the cost of direct material consumed. Whereas here recovered amount shall be reduced from factory cost while arriving at cost of production. Anyone, any doubt in this? Let me know. If there is no doubt, we can proceed. Proceed. Okay, scrap recovery is done. Then what? Cost of production, add opening stock of finished goods, minus closing stock of finished goods. How to value that I will tell in a while. Then admin overhead, general in nature, selling and distribution overhead, that I already told. Interest. Listen, Interest, or we call it as finance charges. Interest or financing charges. Guys, this interest or financing charges are there. No, interest or finance, not bank charges. Bank charges, actually, bank charges also finance charges only, but in one question of RTP, what ICAI is doing is ICAI is considering it as admin overhead. Like a regular banking activities, they will charge some amount, no? That way they are treating it as admin overhead, general in nature. Leave that I will tell later. Now, interest or financing charges, we can divide it into related to two. One, interest or finance charges, equity based, equity based. One more is non-equity based. One more is non-equity based. We will also call it as borrowing fund or borrowed fund. Equity based, non-equity based. Non-equity based is nothing but borrowed fund. Equity based is nothing but your capital, guys. Okay. Interest on capital, etc. will be there. No, all those things in actually in costing, interest only we won't consider. However, if at all it is interest on non-borrowed fund and all is there, no, that is in equity fund and all, like capital, etc. On that, if at all any notional interest and all is there, completely ignore. However, if at all they are given any interest on the borrowed fund, loan, on loan and all, if we have taken any loan, on that if at all we have to pay any interest, that interest you are going to take it as a part of cost of sales. Not cost of production, cost of sales, general expense. So, if it is equity based, that is relating to capital, etc., what we should do? Ignore, not considered in cost sheet. If at all it is non-equity based or a borrowed fund basis, then consider it as part of cost of sales. Not considered in cost sheet. This one what you should do? Consider under what? Considered under cost of sales. Is that clear, everyone? Any doubt? Pakka? Okay. Now listen, everyone. Sometimes question, they don't ask you to prepare cost sheet. They will ask you to prepare condensed P&L. They will ask you to prepare condensed P&L. If at all they ask you to prepare condensed P&L, that means they are asking you to go for a normal P&L. Finance terms, all the financial items also will be taken, all those things. In that scenario, what you do, it's advised. Need not be compulsion. If you want to take it as part of cost of sale, you can take it and do normally. However, if at all you want to do, one more thing what you can do is, if at all they're asking condensed P&L in the question, just don't add it to COS. Rather, after COS, when you take it to condensed P&L, you will take COS and you will compare with sales. No, below COS, you write it as interest on borrowed fund addition. I mean, rather than showing it in a cost sheet, you are going to show it in the condensed P&L. That's it. Simple. rather than showing it in the cost sheet where you are going to show condensed P&L. If at all you are getting confused right now, don't worry. When I show that sum, you will understand in a better manner. Okay. For the time being, just take the note. If question is to prepare condensed P&L, if question is to prepare condensed P&L, then we can treat it as part of condensed P&L and not as cost of sale. Got it, everyone? Hello? Oh. And guys, always remember, pure financial item will not form part of your cost sheet, because being a cost manager, being a cost department manager, I have nothing to do with the pure financial items like bad debt, provision, your commission, interest received, income tax paid, correct? All those things. So pure financial items will not form part of your cost sheet. However, bad debt is there. No, bad debt you can consider it in two ways, guys. One way to look into it is, boss, you failed to collect the payment, so it is nowhere relating to costing, right? One more way to look at the bad debt is, boss, why did you incur bad debt? Because you sold your product on credit. Why did you sell your product on credit? Because you wanted to sell more. Otherwise, they wouldn't have bought. If you don't sell it on credit, people won't buy it. That's the reason your bad debt has come. That means it is a kind of your selling and distribution activity, no? So you can look into bad debt from two points of view. One point is failure of collection of payment. It has nothing to do with the sales. One more point is, it is relating to your selling and distribution. Okay, whatever you consider, just make sure you write one note and come. So pure financial items not considered in cost sheet. Not considered in cost sheet. Example, dividend, interest received, bad debt, provisions for bad debt or provision, any provision, cash discount, donations, income tax, not indirect tax, because indirect tax is already adjusted in the material, etc. I mean, if at all credit not available, if credit available, it's not your cost at all. So nowhere it's taken. Is that clear, guys? Now, determination of cost per unit. Determination of cost per unit. Very careful. Listen here. Listen here, guys. Listen here. Listen here. Guys, your cost of production is there, no, till COP. Hello? Till your cost of production, whatever the cost we incurred towards my option number 1. I repeat again, whatever the cost we have incurred till cost of production, that we incurred towards 1. Sold number of units, 2. Produced number of units. So guys, up to cost of production, your denominator will be number of units produced. After COP, opening stock will be opening stock units, closing stock will be closing stock units, no doubt in that. From COGS, name itself says cost of goods sold. Afterwards, whatever we incurred, everything we incurred towards units sold, not units produced. Understood? So from that point, the denominator will be sold units, not the produced units. So guys, up to cost of production. Sir, for direct material cost, can I divide it with the number of units introduced? The answer is no. I'm finding out cost of the units produced, not cost of the units introduced. So I should divide it with the units produced, not with the units introduced. So up to cost of production, COGS to cost of sales. Up to cost of production, your denominator will be number of units produced. COGS to COS, it is number of units sold. Anyone, any doubt in this? Cost per unit. Guys, anyone? Any doubt in cost per unit? So we can proceed. Done. Cost sheet, all the concepts are done. Few notes we have to take down. Shall we quickly take down? Notes. First one. Guys, cost of carriage outwards related to purchase return shall be treated as factory overhead. Please keep in mind. Guys, whatever we purchase, no, on that whatever the carriage we pay, which one you want me to repeat? Whatever the purchases we do, on that whatever the carriage I pay, that is related to purchase, I am going to add it as cost of material consumed. However, if at all I am returning those purchases, then I am only bearing those carriage charges. Then please don't treat it as the material consumed, rather treat it as the factory overhead. Reason being, relating to material, I know exactly per unit how much, etc. The return on those purchases, I can't add it to the direct material consumed because that is not relating to consumed units, rather it is relating to returned units. So don't take it as part of direct material, take it as part of factory overhead, or in simple factory cost also works. Somewhere make sure in the below the factory overhead you will write this. Okay, one point is that cost of rectification is done now. And one more thing, if at all they have told vehicles are hired and GST payable under reverse charge mechanism and ITC is not available. I repeat again, We hired a vehicle. GST is payable under reverse charge mechanism. ITC is not available. That means GST is our cost. Correct? Now, how to compute that GST amount, sir? Guys, don't only compute it on the higher charges. In all the questions of costing, I don't know why they are doing that in first place. In all the questions of costing, what they are doing is they are taking GST on higher charges plus reimbursement as the GST amount. For example, higher charges I am paying 2 lakh, reimbursement of fuel cost I am giving them 1 lakh. That means total is 3 lakh. No, on that 3 lakh they are charging GST, not on 2 lakh. Practically speaking, from GST point of view, reimbursement is not your expenditure or your income. So on that GST is not applicable. But here they are charging everywhere. So just to make sure we don't contradict with the institute in the examination, and always remember, although you might feel, okay, I am correct in this particular point, end of the day, evaluator will match your answers with the answer key, suggested answers. I mean, not what you get. Of course, there will be something called scheme of marking. Based on that, they will allot the marks. So it's always better to trying to match our answers with institute answer. Okay. So, although as per your GST, only the GST is computed on cost. Here they are computing on cost plus higher charges. So, we are also following the same thing. Let's not contradict. Okay. So, if at all any vehicles, are hired and GST payable on reverse charge mechanism basis, then GST amount shall be calculated on total of higher charges and reimbursement of fuel. Reimbursement of fuel cost. Done. And one more last point you have to remember, guys, about the valuation of inventory, finished goods. If question is silent, not only in this particular chapter, any chapter of costing, if question is silent, closing stock of finished goods is valued under FIFO. If question is silent, closing stock of finished goods is valued under which method? FIFO. What do you mean by that, sir? Nothing. If at all it is purchase return, if at all it's a purchase return, on that if at all you are paying any freight, that you cannot trace it with the units consumed. That's the reason don't take it as part of DMC, rather take it as part of factory overhead. Simple. Now, about closing stock. Whatever was there in the opening, no, that is assumed to be sold first during the period. Whatever is there in the closing, that is what we introduced during the period. I repeat again, whatever was there in the opening, that is sold during the period. Whatever is left in the closing, that is from the portion of what we produced during the period. First in, first out, FIFO. First in, first out. Whichever was there first, it is already out. Whatever is there in the closing, that is what we produce during the period. That means, in simple, can I tell that my cost of production divided by units per produced will give me cost of units produced during the period. Can I say this? I repeat again. My total cost of production, I divide it with units produced. That will give me cost of production per unit produced during the period. And I know that my closing stock is consisting of units produced during the period. Then easily can I say that my cost per unit during the period multiplied with the units in closing stock will give me value of closing stock. Because I know that my closing stock is consisting of only units produced during the period. So all my closing stock I can evaluate cost of production per unit during the period. Simple. Understood? Opening stock, they will only tell how much it is. If they don't tell, for that also you take COP. For that also you take cost of production during the period. Is that clear? So I repeat once again, if at all the question is silent about valuation of inventory, if they tell anything else, you have to do it according to that. If at all they tell valuation of inventory, the question is silent, then you should value it under FIFO. What do you mean by that? Your closing stock will be a portion of your units produced during the period. So all you have to do is find out how much is the cost per unit during the period. How to find it out? Cost of production divided by units produced during the period. I will get cost per unit. That I will multiply with the closing stock units. Automatically I will arrive at cost of closing stock. Okay. So very simple. What we are going to do? Units in closing stock. Units in closing stock will be multiplied with cost of production divided by units produced. Which will be cost of closing stock of finished goods. I got notes today. I mean, the thing is very simple. Whoever writes in tab and all, I mean, we have experienced it. That's why we are telling, try avoid writing things on tab. The reason is examination to be written on paper. Now, earlier my handwriting on paper was better than tab. Now, as we don't write on paper at all, we keep on writing tab. Now, we got used to this particular pencil. Now, when I try to write something on paper, one, I don't get that speed. Two, handwriting will be pathetic. Because I got used to this. Because writing on something physical object and writing on screen, both are altogether different. So, you might feel bit uncomfortable in that. So rather, why to use tab? For so many years, you use paper and wasted. No, use few more. So nothing will happen. Fine. So great. Shall we take break? 10:01 break till 10:31. We are going to start at 10:32. Today, if at all you guys tell Dakshin that this and all, pakka I will be out of the class. Chewing gum? No, just ask. We'll start. Everyone, shall we start? Okay. Online guys, shall we start? Out. Violet. Water. No, I can't ask why also. You are for water. Yeah, break time. What you are doing? Thank you, sir. She was eating, sir. After eating, what were you doing? Half an hour you need to. Washroom queue, sir. Madam. Sir. What? There was a queue for that. There was queue for that. Madam. Queue. Why late, madam? Queue was there. Everything you will tell. Who stood in queue? I only, sir. Done. Now listen, everyone. Sir, there last bench. Shall we start, sir? There, madam, last bench. Shall we start? What is CA? Okay, I will wait for her. Dispatch onwards. I want to be a good person. Let her come in between, like, that's okay. Where were we? Listen. Guys, direct material, direct labor, direct expense. This though directly you can trace it with the final product, you can charge. For example, why late, madam? No, why late? Went to hostel, why? Okay, you are cleaning. Someone else is cleaning? Yes, madam. Sorry, I didn't get you. What is your name? Bala. What if someone takes and go? Warden is there. What if warden only takes? Now for next 3 years she will think of it. Listen, guys. Let's say, sure. Let's say some particular item is there. Okay. Let's say we are manufacturer of mobile phone. Okay. For that, direct material, let's say it's required is 8,000. Direct wages it's required is, let's say, 4,000. Direct expense per mobile required is, let's say, 3,000. May I know the prime cost? 15,000. Now to that, I have to add the factory overhead. Now, do I know the factory overhead per mobile? If I know factory overhead per mobile, then factory overhead will be your direct only, no? Overhead we treated as overhead. Why? Because it is indirect. You can't trace. If at all you know exactly per mobile how much, then it will become direct, no? Then, but cost includes overhead or no? It includes overhead. Then how to arrive at this? How to arrive at this? How do you arrive at cost of production? I want to know only for this. Listen, very simple. So, as we cannot charge directly, what we are going to do is, the overheads and all, we are going to absorb. What? Absorb, or we call it as recover. What do we call it as? Recover. Is that clear? What we are going to do is, we are going to absorb or we are going to recover. How, sir? Very simple. Let's say for the whole organization, direct material cost is 8 lakh. Direct wages, let's say direct wages, it's gonna be 4 lakh. Direct expenses, let's say 3 lakhs. Okay. Prime cost for the whole organization would be 15 lakhs. Now, overhead, factory overhead of the whole organization I know. Per unit I don't know. But all the indirect expense total I know, right? Let's say that is around 30 lakhs. That will give me factory cost of 45 lakhs. Now, how to charge this factory overhead to my unit? Very simple. as a percentage of wages or as a percentage of prime cost, or I will compute total how many labor hours we have worked. Per labor hour, how much is factory overhead? For this particular mobile, how many labor hours we have worked, like that, or machine hours. On some basis, we will take. For example, how much is factory overhead? 30 lakh. How much is wages? 15 lakh. Correct, no? Sorry, 4 lakh. Huh? 4 lakh into 100. How many percentage? 750 percentage. Now what I will tell is my factory overhead is gonna be, absorption rate will be 750% of direct wages. So for this mobile, direct wages is how much? 4,000. So 750% of 4,000 will be how much? So my factory cost will become 45,000 for this mobile. This is how we are going to charge. Or it could be on the labor hour basis also. Like what, sir? Let's say in the factory, let's say labor hour worked is 1 lakh hours. Labor hours or machine hours? Worked is how many hours? 1 lakh hours. So per labor hour, how much it will be? 30 per labor hour. For this mobile, let's say we work for 100 labor hours. So for 1 labor hour, we are going to charge 30. For 100, we are going to charge 3,000. Then factory cost will become 18,000. Like this, on some basis we are going to absorb. More about the different basis of absorption and all we are going to learn in overhead chapter. But now you understand one thing. If at all they give labor hour rate, if at all they give machine hour rate of overhead, etc., that means they have given it as a absorption rate. That you should apply to the any given data. You will get the factory overhead, admin overhead for the particular unit. Is that clear? So remember, if at all they give machine hour rate, labor hour rate, etc., that is nothing but your absorption rate. You have to apply it to the data, you will get the answer. For the time being, remember so much, because there is a big chapter called overheads. There we are going to discuss how to arrive at overhead, what are the bases, what if I recover less, what if I recover more, all those things will be covered there. You don't have to worry about it now. Now you got idea about this. What we will do with factory overhead? We will calculate the absorption rate. Based on that absorption rate, we will charge it to the units. Got it now? For the time being, that much is sufficient. If anything else is required, we'll see in the remaining chapters. It is just going to be the base. Basically, as per study material, this chapter to be taken after material, labor, overhead. But the thing is, for material and labor, few sums you need idea of cost sheet. That's the reason we are taking cost sheet first, because it's base for all the chapters. Then we are going for the other chapters. Okay. So overhead you understood, no? What we should do is we should absorb, because directly we can't charge it. For that we need absorption rate. That in question they will only give. We have to just multiply and write it. That's it. Shall we see few sums on this now? Yes? Okay. 1 second now. So here onwards, guys, please bring your calculators, notes, everything regularly. Here onwards, we are starting with the sums. Shall we start? Yes. What is the point in putting color and all into the notes? I don't know. Something they have done to the screen. Give me a second. Three, two, one, and concentrate. Shall we start?
Yes.
Whoever is using ICAI material, this will be your practical, illustration number 3. Whoever has my material, this will be question number 1. Whoever already 2 weeks before only someone ordered module number 2, sir, in that third question. If I see anyone speaking now, Pakka will throw you out. No, will make you stand. No discussion, nothing, just concentration. Shall we start now? Fun. If something happens to me today, you know whose cursings it is. Guys, look into this question number 1. I say illustration question. Also, a extraction of this question they have asked in RTP May 2018, RTP November 2018, RTP May 2020, November 2020, May 2021, May 2023, May 2024, September 2024, also May 2026. Shall we start? Page number 107. Thank you. You're not even using material. Why you want page number? Or PDF? Oh, okay. Done. Line, madam. Can't see. Sorry. Online, guys. Shall we? Online. Yes. See. Everyone, concentrate. As I already told you, when I am solving, you can take it along with me. However, few questions where I ask you not to, that one you avoid. Okay. No, sir, when you are solving, like I can't concentrate in both the places, then absolutely fine. You can just take photo and you can complete it later part if you are not comfortable with that. But when I check notes should be completed. Okay. It's completely your choice. But I recommend you to take along with me only. Okay. If I'm going fast, please let me know if at all anyone feels it's fast. Am I going fast? Slow? Then fine. Slow means you don't have to tell. Speed means you tell me. Okay. listen. They have given raw material purchased. They have given raw material purchased. What we should do in cost sheet? We are going to take it as the direct material consumed. Okay. GST paid on the above purchases. Don't write anything on the, I recommend not to mark anything on the question. The reason being, now nicely will mark. When you see it again, hey, this I know, this I know, this I know, costing I know, gone. But in examination, they won't mark and give. That time I don't know. I mean, that depends from person to person. I am the person, I don't like reading the already marked questions or already marked concept and all. Nothing new, no. When you read it, you will understand, oh, new. Although I studied already. Correct? So better avoid marking it. Whatever you want to write, just write down in your notes or somewhere. Deal? Okay. See there, raw material purchased will be treated as direct material consumed. We are going to add it. Correct now? GST paid on the above purchases which is eligible for ITC. What I should do? Ignore it. Because it's not your cost. It's not your cost. And it is already not added to the cost also. If it was added to the cost, I would have reduced. But it is not added to cost also. What I am going to do? Ignore it. Freight inwards. Direct material consumed, we are going to add it. Wages paid to factory workers. Direct wages. Factory workers, indirect means it is factory overhead. Here it is factory workers. Factory only production happens, no. So it is direct wages. Is that clear? Next, contribution made towards employees PF ESI. Direct wages. I told you, if at all the question is silent about towards which employee it is, then it is assumed as direct employee. Okay. So we are going to add it to direct wages. Is that clear? Production bonus paid to factory workers. Direct wages. Whatever you pay to your factory workers, which are direct in nature, straight away, direct wages. Royalty paid for production. Amount of power fuel. Amount paid for purchase of molds, patterns, life is equivalent to 2 years of production. Direct expenses, but not the full amount, because I want to know cost for the period. Whereas 8,96,000 is for 2 years, whereas my data is for the year ended 31st March. So what we are going to do? Divided by 2 into 1, which is gonna be 4,98,48. 4,48,000. Is that clear? Job charges paid to job worker. Direct expense. Stores and spares consumed. Factory overhead. Adi is DSLR. In that S is what? Stores and spares. We call it as consumables. Depreciation. Depreciation is overhead. Okay. First, factory building related to factory overhead. Office building, admin overhead. It is related to production or no? We have to check that. If nothing is given, general. Plant and machinery. Delivery vehicle. Selling and distribution. Good. Delivery vehicle is to distribute, no? Delivery of the products. Okay. Sir, why we don't reduce ITC from purchase? It was not added in first place. That's the reason. It was not added. It was not supposed to be added. So it's not added. Salary paid to supervisors. Factory overhead, supervisor. Supervisor, foreman, all those people will be there in factory. Managers will be there for administration. Okay. Next, repairs and maintenance paid for. Overhead. Overhead. Plant and machinery. Sales office building. Vehicle used by directors. Admin overhead. Sales office building, sales, selling and distribution. Insurance premium paid. Overhead, smart. Plant and machinery. Factory overhead. Factory building. Stock of raw material and WIP. Sir, all three are factory only. Instead of this, you would have told factory overhead no rather than overhead. Expense paid for quality control. Quality control, we should add it to the factory cost while arriving at cost of production. While arriving at cost of production. Got it? Salary paid to quality control staff. Quality control, add it to the factory cost while arriving at cost of production. Research and development cost paid for improvement in production process. Research and development, add it to the factory cost while arriving at cost of production. Expense paid for pollution control and engineering maintenance. Factory overhead. If you remember, I told you service department including engineering and pollution control. Always remember, pollution control is different, quality control is different. Pollution control is different, quality control is different. Is that clear? Expenses paid for administration of factory work. Administration overhead related to production. Please keep that thing in mind. So this we will be adding it to factory cost while arriving at cost of production. Salary paid to functional managers. Overheads. Production control manager. Managers, I told already, they won't be there in the factory administration, but it's related to production. Got it? Finance and accounts. Administration overhead, general in nature. Sales and marketing. Selling and distribution overhead. Is that clear, everyone? Pakka. Salary paid to general manager. Administration overhead, general in nature. Packing cost paid. 1. Primary packing. Primary packing cost while arriving at cost of production. You have to add it to factory cost. You will arrive at cost of production. For redistribution of the goods, selling and distribution overhead. Is that clear? Interest and finance charges paid for usage of non-equity fund, that is borrowing funds. Cost of sales. Fees paid to auditors, administration overhead, legal advisors, independent directors. Performance bonus paid to sales staff. Selling and distribution overhead. Is that clear, everyone? Next, value of stock as on 1st of April 2022. This is opening stock of raw material. Opening stock of raw material. Raw material. Sorry, opening stock. First one, raw material. Add it to the direct material consumed. WIP, add it to the gross works cost while arriving at Actually, better write it as factory cost. In question they have asked factory cost. Okay. Finished goods. Add it to the cost of production while arriving at cost of goods sold. Clear? Value of stock as on 31st March, that is closing stock. Closing stock of raw material. Reduce it from the direct material consumed. Closing stock of WIP. Reduce it from the gross factory cost while arriving at factory cost. Closing stock of finished goods. Reduce it from the cost of production while arriving at cost of goods sold. Amount realized by selling of scrap and waste generated during manufacturing process. What we should do? Reduce it from the during the manufacturing process. That means labor overhead is involved in it. Reduce it while arriving at COP. Not scrap recovery from material. Scrap recovery from the units in production it is. So reduce it from the factory cost while arriving at COP. Sir, why to reduce, sir? Because it's not a cost, it's an income. Reduction from the cost. Is that clear, everyone? From the above data required, prepare a statement of Arnav Inspat Udyog Limited for the year ended 31st March 2023 showing prime cost, factory cost, cost of production, cost of goods sold, cost of sales. Hope you guys understood this. Yes, mark it as homework. Oh my God. This is the master question, mark it as homework. Alright sir, we don't know format to do, you are giving homework, remaining questions we are seeing. Okay, don't worry. Oh sir, for homework you are giving answer key, sir. The answer is no, 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 no. Try to solve it on your own. Come back on time, otherwise you will get free amla. I didn't get you. Question number 1. 2 we didn't start it. I said question number 1 homework. Ignore her. That's what you should do. What's your name? Janani. Ignore Janani. Why? Listen everyone. Look at this question everyone. Hello, hello, hello. The art of reading the question. Oh, this one I forgot to tell. First, I will read the question. Second, I will allow you guys 1 to 2 minutes to go through the question depending upon the size of the question. At that time, if at all see anyone talking, I'm damn sure guys, even Sadhguru's inner engineering program can't save you. I get so mad when people instead of reading question if they waste time. See, make the habit of reading question, because in question only half answer will be there. Half answer will be there, there only. So you should make a habit of reading question. So when I give time to read the question, please go through the question. Because without reading the question, when we try solving answers, you might get confused there. Okay. So when I give time to read question, please read the question. Shall we start now? Art of reading question, very simple. First check what they are asking you. Then you should go through full question, even MCQ or whatever it is. See, you are required to prepare cost sheet in respect of the above, showing 1. Cost per unit, 2. Profit for the month. Moral of the story, they are asking cost per unit also. That means we need 2 amount column. Total amount column also we need. Cost per unit also we need. Is that clear? Okay. The following data relates to manufacturing of a standard product. What do you mean by standard product, guys? Sorry? Standard means similar. Everything is same. Standard. Huh? Same it is. Like identical. Okay. Why they have given this, sir? Because there is one more chapter, job cost. In that it will be customization basis, not standard. The following data relates to manufacture of the standard product during the month of April. So 1 month data they have given, please keep in mind. Raw material they have given. Where it will come? Direct material consumed. Direct wages they have given. Machinery work they have given, machinery rate they have given. Why they have given this? I told just after break to determine your factory overhead. We will absorb factory overhead, I told, no, on some basis. Here it is machinery basis. That is, during the year 10,000 machineries were used, and per machinery we are charging 8 rupees. We are recovering 8 rupees. Overhead we are charging is 8 rupees. That means factory overhead for the period will be 80,000. You understood why it is? Next, admin overhead they are telling general in nature. Great. They are only telling. Selling overhead per unit they are telling. Selling and distribution overhead. Units produced they are telling 4,000. Units sold they are telling 3,600. They are not telling anything about the opening stock. That means opening stock was nil. You produced 4,000 units. In that you sold 3,600 units. That means 400 units are your closing stock. And best part, closing stock, everything is out of produced during the period. Everything out of produced during the period only. Nothing is of past. Next, selling price per unit they are telling 125. Go through the question, then we will start solving this. Oh, anything happened to TV? No. We'll proceed. Done reading question. Fine. First, you should give the title. That is heading. Cost sheet of they haven't given no information. Sir, how you said opening stock is nil? Because nowhere in question I can see there is a opening stock. So assumption should be nil only, no? So if at all, for which particular proprietor, if at all they told, we would have taken that company, etc. Here they haven't told any name, so I am just going to do right cost sheet for the period, for the month of April. Cost sheet for the month of April. Here they haven't told. Particulars. Total cost. Cost per unit. Shall we start? First one, direct material consumed. Direct material consumed, no opening stock, closing stock, purchase information and all. Straight away they only have given it as 180,000, no other information is there. So we are going to take it as 180,000. Sir, can we do it along with you? Yes, unless and until I tell, wait, don't do it, you can do it along with me. Direct material consumed is how much, guys? 1,80,000. Cost per unit will write later part. Cost per unit will write later part. Direct material consumed 1,80,000. Any doubts here? No. Next, direct wages. Direct wages, they are telling it as 90,000. No direct expense information they have given. So this only will be my prime cost. This only will be my prime cost, which is 2,70,000. 2,70,000. Is this clear? To this, I am going to add factory overhead. In examination, you should clearly write factory overhead, full form. For the timing, if you want, you can write FOH, but in examination, it's advised to write full. And here also, please write wherever it is rupees, it should be mentioned as rupees. Wherever it's units, mention it as units. Wherever it's hours, mention it as hours. Guys, in costing, hours, unit, rupees, everything is important. Just because number is there, that need not be rupees only always. So it is always advised to write what it is. Okay? Make a habit of that. Writing what it is, units, amount, all those things. Factory overhead on the basis of machine hours we are absorbing. How many machine hours it is? 10,000 machine hours. And how much is the hourly recovery rate? 8 rupees per hour, which is gonna be 80,000. Is that clear? Hello? That will give me factory cost. Sorry, gross. WIP is there? WIP is not there. WIP is not there, no. So your gross will be factory. So that will give me factory cost, which is gonna be 3,50,000. Which is gonna be 3,50,000. Next, APQRS, admin overhead, related to production is there in the question or what? No. Primary packing, quality control, research and development, scrap recovery from units in production. Moral of the story. Moral of the story. This only will be your cost of production. Now let's find out how much is cost per unit. Cost of production should be divided by what? Produce number of units. How many units you produce? They are telling 4,000 units. So 3,50,000 divided by 4,000. 87.5. 87.5. Is that clear? Add opening stock of finished goods. In the question, it's not there. Minus closing stock of finished goods. Closing stock of finished goods, we know that out of 4,000 units we produced, 3,600 were sold. That means 400 are still with us. That of course I will evaluate cost per unit produced during the period. 400 into 87.5, which is gonna be 35,000. Which is gonna be 35,000. See, for opening stock, closing stock, no need to write per unit. If you write per unit, then it will become 0 there. Opening stock of WIP, closing stock of WIP, opening stock of finished goods, closing stock of finished goods, always per unit column you ignore. Okay. Now what we got? We got cost of goods sold. Cost of goods sold 3,15,000. If at all opening is there, then the total per unit will change. Otherwise, per unit will not change. Because only produced number of units only sold, no? You can find out. For COGS onwards, you should divide it with what units? Sold units. 3,15,000 divided by 3,600. 87.5. When opening is not there, units sold are nothing but what we produce during the period only, no? So cost per unit will remain same, no? Understanding? If opening stock is there, of course it will change. No doubt in that. Because opening cost would be different. This cost would be different. Able to understand? Okay. Now, to this COGS, I am going to add administration overhead, which is general in nature, which is 35,000. And I am going to add selling and distribution overhead. Guys, listen, selling and distribution overhead as well as admin overhead in general, always for the units sold, not for the units produced. Selling and distribution, how many units we sold? 3,600, 5 rupees per unit, which is gonna be 18,000. Got it? Anything else is there? No. So this will give me cost of sales. This will give me cost of sales. Now cost of sales will be 3,68,000. To that I will add profit, which is gonna be balancing figure. I know sales. Sales is 3,600 units. Per unit I am selling at 125 rupees. So my sale would be 4,50,000. So my profit would be 82,000. Got it? Now quickly can you help me with finalizing that per unit column? Sales is 125. 82,000 profit you made by selling 3,600 units. Per unit 22.75. Yeah? 20.77? Okay. 777. So 78. Cost 3,68,000 divided by 3,600. 102.22. 102.22. Is that clear? 18,000 divided by 3,600. 35,000 divided by 3,600. 9.7. 72. Okay. Now we know that up to COP we should divide it with units produced. So 1,80,000 divided by 4,000. 20? 45. 90,000 divided by 4,000. 2,70,000 divided by 4,000. 80,000 divided by 4,000. Simple. Is that clear? And always in costing, whatever they have asked in the question, that you have to answer particularly. First one, what they have asked. Cost per unit is rupees 102.22. Profit for the month is rupees 82,000. Profit for the month is rupees 82,000. Is that clear, everyone? Allowing you guys a minute of time, quickly go through this. If you guys have any doubt, let me know. If there is no doubt, we can jump into the next question. From as 87.5. But only apply that. 87.5 minus 87.5. Sir, cost per unit is 87.5. No. Cost means total cost per unit, including your selling and distribution and admin overhead. If they just ask you cost per unit produced, cost of production, then it is 87.5. If they ask just cost, that means remember total cost per unit. So we can proceed. I feel everyone sure. Question number 3. Past year paper, May 2022 for 10 marks. You are required to 1. Prepare a cost sheet for the above period showing 1. Cost of material consumed, 2. Prime cost, 3. Factory cost, 4. COP, 5. Cost of goods sold, 6. Cost of sales. Second, calculate the selling price per unit if the sales are made at profit of 25% on sale. Look at the question, everyone. The following data are available from the books and records of A Limited for the month of April 2022. Particulars and amount. Stock of raw material on 1st April is 10,000. Raw material purchased is 2,80,000. Raw material, where it will come first one? Raw material purchased. Manufacturing wages. Depreciation on plant. Expense paid for quality control check activities. Lease rent of production asset. Admin overhead related to production. Expenses paid for pollution control and engineering and maintenance. Stock of material. Reduce it from the direct material consumed. Primary packing. Cost of production. Primary packing, cost of production. R&D. Packing cost for redistribution. Advertisement expenses. Stock of finished goods as on 1st April 2022 was 20,000 units. Opening stock. Having total cost of 28,000, value of opening stock they only have given. The entire opening stock of finished goods has been sold during the month. That means if they don't tell also, the assumption is that only. FIFO only. They are particularly telling that it's a FIFO. Production during the month of April was 3,000. Closing stock of finished goods is 400. That means how many units we sold, guys? 200 was there in opening. We produced 3,000. Closing was. That means 2,800 units we sold. They are asking this. Quickly go through the question. We are going to start answering. Sir, the person who purchased question bank before class started, in that module, chapter number 6, first lot is PYP, no? There you can find it in May 2022. You will find it as question number 5 or question number 6, somewhere there. Might be 7, 8, 9 also. No, not sure. Found it? No? Not finding it. Not finding it. Oh, you have that also. Enjoy. But why did you order a month, sorry, week before? 2 weeks before? With other materials you ordered, huh? Only for this you ordered. I loved your enthusiasm. Now I am feeling guilty for changing the format of my question bank. He ordered from application by paying 1500, it seems. In that only the thing which will come to use now is question study material. That once you get ICAI material, no. Shall we start, everyone? Great. First, see here they are not asking cost per unit, so I am not going to do cost per unit column. But anyhow, there are adjustments, so I will take two amount column. One is for workings, one is for amount. Did they tell the organization name? Yes, A Limited for the month of April. So what heading you will give? Cost sheet of A Limited for the month of April. Two amount columns I will take, one for the workings, one for the actual. First one I am starting with direct material consumed. Direct material consumed, of course they have given a split there, so accordingly I am going to do. First I will take opening stock of raw material. Opening stock of raw material. Guys, how much they have given it as opening stock of raw material? 10,000. Add cost of purchase. Cost of material purchased, how much they are telling? 2,80,000 minus closing stock of raw material. How much they are telling closing stock of raw material? 40,000. Anything else is there, guys? No. So outer column it will be 2,50,000. Anyone, any doubt in the direct material consumed workings? No doubt. Next is your direct wages. Direct wages is rupees 70,000. Rupees 70,000. Did they speak anything about the direct expenses? No. That means this only will be your prime cost. So prime cost is 3,20,000. Prime cost is rupees 3,20,000. Now we are going to factory overhead. Add factory overhead. First item in factory overhead, depreciation on plant, 15,000. Depreciation on plant, 15,000. Next one, lease rent of production asset, 10,000. Lease rent of production asset 10,000. Next, expenses paid for pollution control and engineering maintenance. Expenses paid for pollution control and engineering maintenance. How much it is? 1,000, right? 1,000. That's all right. So your factory overhead would be 26,000. Factory overhead is 26,000. I don't think so. They have given adjustment of WIP here. No adjustment of WIP. So this only will be my factory cost. This only will be my factory cost, 3,46,000. Any doubt? Now, admin overhead related to production they have given. Admin overhead related to production, how much it is? Admin overhead related to production is 15,000. 15,000. Next is P, primary packing cost. Did they give primary packing cost here? Yes, sir. 8,000. Okay. Add primary packing cost 8,000, right? Okay. P, after P it is Q, quality control. Did they give quality control? $4,000. Quality control 4,000. PQR. Did they give research and development? Yes. How much it is? 5,000. Minus yes. Did they give S? They haven't given? Great. So now what we get is cost of production. 351, 361, 369, 373, 378. 3,78,000. 3,78,000. Is that clear? Now to this we will add opening stock of finished goods. They are telling it is around 200 units at the cost of 28,000. 200 units at the cost of 28,000 minus closing stock of finished goods. Listen here everyone. One second. Listen, then you can copy down that. Listen. They told whatever was there in the opening, everything was sold. Correct? That means whatever we produce during the period, that is what will be there in the closing stock, Rakshita. So, how many units was there in opening? 200. How many units we produced? 3,000. How many units we sold? 8. 2,000? 800 only, no? That will give me closing stock units. Or did they tell closing stock units directly? They only told 400. Okay, then fine. 400 units. I know that whatever was produced during the period, that is what remaining during in this closing stock. That means what is the cost of units produced during the period? 78,000. This we incurred to produce 3,000. 3,000 units. To produce 3,000 units. Now may I know how much is the value of closing stock? Sorry? Oh, okay, sorry. 50,400. Anyone, any doubt in the valuation of closing stock here? We are going to value closing stock at the cost of production during the period. FIFO approach. See, sir, they told that whatever is there in the closing, everything is produced during the period. How much is the cost of production per unit during the period? We incurred 3,78,000 to produce 3,000 units. To produce 3,000 units. So per unit, how much is the cost? 378 divided by 3,000. How much? Sorry? 126. Cost of production per unit is 126. In closing, we have 400 units. So 126 into 400 will give me closing stock value. Got it, everyone? Hello? Done. So this will give me cost of goods sold, which is 3,55,600. Is that clear? Neha? Yes. Okay. Add admin overhead general in nature. By any chance it's there? No admin overhead general in nature? Awesome. Then only selling and distribution. That is there, no? Advertisement expense. Oh, packing is also there. Oh, no admin overhead. So only selling and distribution overhead. So in selling and distribution overhead, secondary packing is there, no? Secondary packing, how much it is? 1,500. Next one, what else is there? Advertisement expense 1,300. $1,300. 2,800. That's all right. That will give me cost of sales. Cost of sales would be 3,58,400. To that, I will add profit. How do we arrive at profit, sir? They are telling profit is 20% of sales. That means if I take sales as 100, profit will be 20. Cost will be 80. So 80 means 3,58,400. 20 means question mark. If you guys want to use the equation method as a working note, you can do it. No problem. How much? 89,600. That will give me sales. $4,48,000. Anyone, any doubt here? Everyone, is that clear? Next, what they have asked, calculate the selling price per unit. So selling price per unit shall be, guys, we made 4,48,000 in sales by selling how many units? 3,000 units we produced. How many were there in opening? 200. So 3,200. How much is there in closing? 400. That means you sold how many units? 2,800 units. So 4,48,000 we made by selling 2,800 units. So how much is the selling price per unit? 16. Anyone, any doubt in this? Quickly go through this, then we can go to the next one. Hope it's clear, everyone. Pakka, no doubt. Sir, 2800 computation. Very simple. 200 you had opening. 3000 you produced. So total goods available for sale was 3200. In that 400 is still with you, means what you sold is just 2800. Is that clear? Oh. Sir, once again tell the profit calculation. Let's say they have given profit percentage on sales. Let the sales be 100. Whatever the base they have given, that you take as 100. If the sale is 100, profit will be 100 into 20%, 20. That means cost should be 100 minus 20, 80. So 80 means we know the cost, 100 means question mark. That will give sales. 80 means we know the cost, 20 means question mark. That will give the profit. Guys, don't talk. Look at this question, everyone. Look at this. Maja is there, sir. Let's go to watch Jananayagan. Guess the person. Maja is there, sir. Dilip, sir. Correct. Yes, sir. We'll go to watch Jananayagan. You have already watched, no? That you were telling some link, something official release. So, see, PYP May 2023, 10 marks. The following information is available from SN Manufacturing Limited for the month of April 2023. Opening and closing inventory, opening stock of finished goods they have given, closing stock of finished goods they haven't given. Stock of raw material, opening, closing they have given, WIP, opening, closing they have given. What they are asking here? Prepare a cost sheet for the month ended on April 30th, 2023, showing the various elements like raw material consumed, prime cost, factory cost, cost of production, cost of goods sold, cost of sales. Calculate the selling price per unit if the profit charged is 20%. Similar to the previous question. Correct, no? Fine. Who has headache? Someone got headache for this? Seriously? You? Kidney touching it is. Welcome to CA. You want to take break or something? Good for you. The following information is available from SN Manufacturing Limited for the month of April 2023. Opening and closing inventory, stock of finished goods. Where it will come? From COP while adjusting COGS. Stock of raw material, direct material consumed, one to be added, one to be reduced. You know that what to add, what to reduce. WIP, from gross, they're asking factory cost or works cost? Factory cost. So from gross factory cost, when you go to factory cost, you are going to add opening, you are going to reduce closing. Raw material purchased, add it to direct material consumed. Carriage inward, add it to direct material consumed. Direct wages paid, direct wages. Royalty paid for production, direct expenses. Purchase of special design molds patterns, direct expense but not the full amount, only the amortized amount. How much is the amortized amount? 1,53,600 is for 12 production cycle. I don't know what you guys are dividing in first place. Anywhere have we read April month how many production cycle? Then what you guys are dividing? Assume one production cycle is completed in 1 month. So now you should divide by 12 and multiply it with 1. Divide by 12. How much it is? 12,800. Power, fuel and haulage. Power, fuel, direct expense. See, in few questions, ICAI has given alternative answers. By taking one in direct expense, by taking one in factory overhead. Let's not complicate. Always higher charges of equipments, power, fuel, take it as direct expense. Sorted. Okay. Research and development cost for improving the production process. R&D while arriving at cost of production. Primary packing cost. Primary packing cost while arriving at cost of production. Admin overhead. General in nature because they didn't tell anything. So we are going to take it as admin overhead general in nature while arriving at cost of sales. Salary and wages for supervisor and foreman. Factory overhead, don't take it as admin overhead. They are not managers. They will be inside factory. Opening stock of finished goods to be valued at 8.05. That they only told. During the month of April, 152,000 units were produced, 150 to 600 units were sold. The closing stock of finished goods is to be valued at the relevant month's cost of production. The company follows FIFO. If they don't tell also, we are going to do this only. Now may I know how much is in our closing stock? Guys, opening, how many units were there? How many units you produced? 1,52,000. So how many units were available for production? 1,54,500. So units, available for sale was 1,54,500. In that sold was 1,52,600. Moral of the story, 1,900 units are closing stock. Is that clear? Hello? Selling and distribution expense are 0.2 per unit. Unit means here units sold or units produced? Units sold. Admin overhead general, selling and distribution always for unit sold. Admin overhead for production up to COP. Everything is for units produced. Peace. Sorted. Simple question. You will get 8 minutes time. You have to complete it. If you don't complete it, then we'll see what to do. Chalo, 9 minutes as first question. Try solve fast, everyone. Question number 4. See, they are not asking per unit column. If you want to do, you can take per unit column. Otherwise, you can do it total wise. Then you can go for per unit. If you get any doubt, feel free to ask. You will get other 8.5 minutes. Two more minutes. Two more minutes. Two more minutes. Unbreakable love between Dilip sir and Rastrith sir. You don't know about Priya Saris? Done. Is that done? No, no. Oh, you went till sales. Good. Sales. Good. People still in prime cost, may I know? How many of you are still in PC? That's okay, that's okay. Only one now? Okay. Gross works cost. Works cost. COP. Majority of you guys are at CO. Fine. Other information in the second page, second point. Now, what is that? Madam. Okay, everyone. Sure. Listen. Shh. Stop talking. Stop talking. Please concentrate now. Material purchased, carriage inward, opening stock, less closing stock will give you direct material consumed. All of you guys, did you get 7,35,100? Awesome. Direct wages, no adjustment was there. Straight away, you should have taken 322,800. Have you taken? Talking about direct expense, in the inner column, you should have taken royalty 35,800. Amortization 153,600 is for 12 production cycle. In the month of April, 1 production cycle is there. So 153,600 divided by 12 into 1, 12,800. Power, fuel and haulage 70,600. That will give you prime cost of 11,77,100. So for majority of people, I think you would have got 11,77,100. No doubts. To that, we added factory overhead. Under factory overhead, there should be salary and wages to supervisor and foreman. Yes, only one thing is there. Anything else is there? No. That will give you gross works cost of 12,05,100. To that, we added opening stock of WIP. We reduce closing stock of WIP. We will arrive at a works cost which is 12,04,800. Right? Okay. To that, admin overhead related to production, not there. Primary packing cost, it's there. 6,920. Quality control, not there. Research and development, it's there. Minus scrap value from recovery is not there. So that will give you COP of 12,43,400. Correct? Everyone got this much? Now, to that, we have to add opening stock of finished goods. That is 2,500 units into, they are telling 8.05, which is, 20,125. Got it? Then we determined our closing stock units are 1,900. But we don't know the value of that. Very simple. We are using FIFO. What do you mean by that? Whatever was there in the opening was sold. So nothing of 8.05 will be there in the closing stock. That means closing stock consists of only units produced during the period. What is the cost of production during the period? 12,43,043 now. 12,43,400. 12,43,400. Guys, these two produce how many units? 1,52,000 units. So per unit how much? 8.18. 8.18. Now what we do? We know that closing stock is 1,900. It will be valued at 8.18. 1,900 into 8.18. 15,542. Is that clear? Hope value of closing stock is clear, everyone. That will give me COGS. To that I will add admin overhead general in nature. Selling and distribution they told zero point 0.5, sorry, 0.2 per unit. So 0.2 into, you got it? How come? Check. I scrolled exactly when you took the mobile phone up. Smart, you are very fast. 0.2 into units sold. Units sold they have given how much? 1,52,600. So 0.2 into 1,52,600 will give me selling and distribution. That will give me cost of sales. Now I know that cost of sales means 80, 20 profit question mark, which is 331. You will get the sales value. Now sales value, if I divide by units sold, automatically I will get the selling price. I don't think so much complications are there in this. Like alternative answer they have given, that you leave. They are just taking your power and fuel as factory cost. Okay, fine. Where were we? Yeah, hope it's clear, everyone. Whatever is incomplete, can you complete it in home? Try solving it. You understood? No. Here the main point is value of closing stock. If anyone still has any doubt, please let me know. That's okay. Closing stock valuation, if at all anyone want me to explain one more time, okay. See, madam, FIFO method you understood. See what FIFO says, whatever was there in the opening stock, everything was sold. That means whatever you produced, no, whatever you produced, that could be divided into two things. How much is sold, how much is in closing. That means one thing is very clear here. Your closing stock is part of your produced unit. Opening stock value has nothing to do. Now, how to determine the cost of produced unit? Very simple. I will find out cost of production divided by produced units. I will get to know cost per produced units. Now, in this, a portion is sold. In this, a portion is in closing. So what I will do? Closing stock unit into cost per unit. If I do, I will get the closing stock value. You don't have to consider cost of opening stock to determine the cost per unit of closing stock. Because I know that opening whatever was there is sold. In closing what is there is part of your produced units. Simple. Can you show the admin overhead? Admin overhead is 15,000. By the way, recorded students, if at all you guys have any doubt and all, please just don't write doubt. Make sure you write which question number it is, which point it is, and it will be very helpful if at all you write timestamp for that. In which video, at what timestamp, I can find that point wherever you are getting doubt. Then it's fine. And one more thing, before asking, immediately just pause the video and don't pause the video and ask the doubt. Wait for me jumping till the next point or the next to next point, because sometimes in the next point your doubt will get cleared automatically. And if at all it gets cleared, just come back and delete your doubt. That happens. Drop the doubt, then yeah sir, it got cleared that time only. So that's the thing. And worst part, this point no recorded student would have watched what I told now. Answer I got. Skip. 30-40 seconds. Next question. This only answer. You got different answer? Same. Guys, don't talk. Quickly mark your attendance, guys. And yes, see how much ever system we can bring. We know that you are very much capable of breaking those and sending it to your friends. But please don't do that. The thing is very simple. Somewhere your friend will be watching movies, somewhere your friend will be wasting time. Now, of course, that person will value you. Imagine after some time when your friends, syllabus 2 gets completed will be too much lagged. That time your friend will start cursing. Ayo, if that person didn't send it in message, if that person didn't send photo, at least I would have attended class and I would have completed the classes. I wouldn't be in this scenario. So the first person to get blamed is you. And then they will blame themselves for not going. And remember, it's not your friend's money, it's your friend's parents' money. If you are a real friend, you should hit them and you should tell, come and attend class. Not that if you are a real friend, you should send them a QR. Know the difference. Whoever is scanning now, wait for it. Next scanning, next QR will open in a while. Sir, wait, sir. Let it go. Sir. That's almost about to go. After that, new QR will be generated. On that you scan. Because 120 no. See, it's red still. Wait. Now you start. This will be the last QR. Oh, done marking. Oh, now no OTP and all. Hey, 120 is more than sufficient then. Tomorrow onwards, only one QR. No one cares. Paid fees. Why it didn't get scanned? Come back. Come back, madam. Come back. Done. Break. Done. Not break. Attendance done. We are. Oh, go. Yesterday only I told you. You want to go? You want to go? No, if you want to go, go. I thought you both are going. Anyone still marking their attendance? 5, 4, 3, 2, 1.5, 1 and 0. Whoever didn't mark, please talk to team. Look at this fifth question, everyone. Go back, madam. Fifth question. The following information has been obtained. Sir, wait, gone. Can't help, madam. What? 6 minutes I have showed. The following information have been obtained from the records of ABC Corporation for the period June 1st to 30th June. Okay. Cost of raw material opening is there. They are asking you to prepare the statement showing these information. That means they are expecting you to prepare cost sheet. Opening stock of raw material, what we should do? Add to direct material consumed. Closing stock, reduce from direct material consumed. Opening stock of WIP, add to gross works cost, factory cost actually. Reduce from gross factory cost. Purchase of raw material, cost of finished goods, add to cost of production. Reduce from cost of production. Purchase of raw material during the period, add it to direct material consumed. Wages paid, direct wages. Factory overhead, admin overhead related to production. Whatever I read, you read same. While arriving at COP, you should take S and D. Sales is sales. Correct? No? Done. I think you can take it as nothing is there. No need to do homework also. Roughly you do. Just random numbers you add, not random numbers. Like 60,000, add 480,000 minus 50,000, that will give you DMC. Add the direct wages, you will get prime cost. Add factory overhead, gross works cost, Question number 6. Guys. Question number 6. PYP May 2018 for 10 marks and RTP May 2019. From what they are asking, prepare a cost sheet of the firm. From the following information related to a manufacturing concern for the year ended 31st of March 2018. Raw material opening, what we should do? Add it to direct material consumed. Raw material closing, reduce it from direct material consumed. Purchase of raw material, freight inward, direct wages outstanding, add to direct wages, because paid only is not direct wages, incurred during the period is direct wages. Factory overhead 20% of prime cost. That means they have given absorption rate here. WIP, add to gross factory cost. Closing, admin overhead related to production, while arriving at cost of production. Distribution expense, opening stock they only told 1217 units at the value of 6,08,500. Sale of scrap of material. So raw material directly scrapped. Reduce it from the direct material consumed. If at all they told which is there in manufacturing, which is in the production process, then you should have reduced it from the factory cost while arriving at COP. Is that clear, everyone? Now, firm produced 14,000 units during the period, whereas stock of finished goods at the end is valued at COP. If they don't tell also, we will do that only, because the assumption is FIFO only. The firm sold 14,153 units at the rate of 618 per unit during the period. So listen here guys, how much is the opening stock? 1,217. How many units you produced? So units available for sale is 15,217. Did you sell so much? No, you sold only 1,200. I mean, you kept 1,217 as closing. So sold units are 14,000. Sold they have given. Oh, that is opening. No, sorry. I thought 14,153. How much is closing? 1,000. So closing stock is 1,064. Is that clear or any doubts? Clear? Okay. Don't write down, just concentrate here. Roughly I will show once. Direct material consumed. Opening is how much? 2,28,000. How much is your cost of purchase? 42 lakh. 25,000 minus closing is how much? 3,05,000. Anything else is there relating to DMC? Freight inward is there, 1 lakh. Correct, no? Sale of scrap of raw material is also there, which is 8,000. That will give me direct material consumed. 42,40,000. Talking about the direct wages, paid 12,56,000, outstanding 1,50,000. So direct wages for the period is 14,06,000. Got it? I don't think so any direct expenses are there. No direct expense. That will give me prime cost of 56,46,000. This will be my prime cost. To the prime cost, I am going to add factory overhead. They are telling factory overhead is 20% of prime cost. So 20% of 56,46,000, which is 11,29,200. That will give me gross factory cost 67 lakhs. Got it? To that, we will add the opening stock of WIP, which is 192,500, and we will reduce closing stock of WIP, which is 1,40,700. $68,27,000. That will give me factory cost. Oh, sorry, that only is factory cost. Tell me the net amount, no, here. Sorry, sir. 52, 500, no. 51,800, okay. 51,800. 51,800. So that will give me factory cost. That will give me factory cost of 68,27,000. To that, I am going to add admin overhead related to production. Is there any? Yes. 1,73,000. P, primary packing cost. Is it there? No. Q, quality control. Is it there? R, research and development. Is it there? Minus, yes, scrap recovery from units in production. Is it there? No. That will give you cost of production 70 lakhs. To that, I will add opening stock. How much is cost of opening stock? 6,08,500 minus cost of closing stock. Listen here. We know that closing stock to be valued at COP because they also told if they don't tell also we assume FIFO. That means how much is my cost of production during the period? 70 lakhs. To produce how many units? 14,000 units. That means to produce per unit, how much is my cost? 500. That means my closing stock units to be valued at rupees 500 per unit. Value of my closing stock will be 500 into 1064. 5 lakh 32. You guys understood how 1064, right? We had opening of 1217. We produced 14,000. Total units available was 15,217. In that 14,153 is what we sold. Then we left with 1064. So how much? 70,000. Array, tell me the net amount, no? There. 76,500. That will give me COGS. 70 lakh 76,500. 70 lakh 76,500. My COGS is 70 lakh 76,500. To that, I am going to add admin overhead, general in nature, which is not there. Selling and distribution, they are telling 16 per unit. So always remember, I should multiply with the units sold. 14,153. 2,26,448. That will give me cost of sales. How much? 73,02,948. To that, we are going to add profit. I think here it should be balancing figure because they are talking about sales. How much they are telling sales? 618 per unit. So 14,153 units we sold at 618. May I know the sales, please? 87 lakh 554. Profit, please. 14 lakh. Got it, everyone? Done. So, hope you guys understood here. Everyone, any doubts so far? No? Okay. Tomorrow we'll be completing this chapter. Okay. This question, if at all you think you need some more practice, you can try it as homework. Otherwise, just go through this once. Roughly, you can calculate and find out. Okay. If you feel like, okay, I need practicing of all these things, we can do. Remember, all the question, whatever is there in the material, I recommend you guys to try solving each and everything properly. So that next revision time and all, it will be easy. Correct? Now, what work you have afternoon? Nothing. Going and sleeping. Rather than that, do this. Chalo. See you guys tomorrow. Thank you so much. Bye-bye. Yeah, you can. I sent you. Yes, thank you guys. Bye-bye.